housing prices are going down, but not really. And I know that sounds confusing, but I think the information we're getting is very confusing. Let me walk you through the data so you can understand where the housing market is. As always, let's start with the overview of where the market is. Nationally, most important indicator, the inventory levels continue to go down. The only year with lower inventory was last year during the height of the pandemic a year ago. This is 2 years ago when the pandemic had started. Every other year had more inventory we have now, even though we have more houses now and more people now. So this tells you we're at historic lows for inventory. If the housing market was crashing, you'd have to have houses coming on the market in increasing numbers for there to be less demand to drive prices down. That's not happening clearly. Also in Los Angeles, same thing. We look a little deeper. Take a look at this. Going back to 2013, we have the lowest inventory now of any year other than the pandemic, going back to 2013. And I think there was some aberration in the MLS back then. But certainly over the last 8 years, other than the pandemic years, where the inventory was artificially low, you can see that we have historic low inventory. So again, you cannot have a housing crash without excess inventory. When you have prices go down, that must mean, by definition, there's more inventory than buyers looking for it. So when you hear about an imminent housing crash, it might be in certain pockets where there's a lot of building, certain cities, Phoenix, Austin maybe, certain parts of Florida, but not nationally overall, not in Southern California. So what is happening? Well, let's dig a little deeper and see. You'll see that there's statisticians who are saying that housing prices have gone down in 5 cities, the top 5 decliners, and then the bottom 5 decliners. Now, this is of all cities in America, these are the ones that have experienced a decline. But more importantly, I would say even these numbers are not real. Take a look here, Los Angeles, 6.1%. So Case-Schiller is saying of all housing prices, they totaled all the sales prices divided by the unit count. The prices went down 6.1% from their highs in 2022. Now, not only is that not significant, I would say, that's really not accurate when you break down the numbers. What do I mean by that? Well, let's take a look at the key indicator besides inventory would be the dollar per square foot, meaning if you have big houses, medium, and small, are the big houses dropping in price or the medium or the small? There's a great research company, Altos Research. I actually did a video on their product for professionals. Here's Los Angeles market, and they're saying overall it's become closer to a seller's market in the last period of time. Notice the per square foot. It had been in September $743 per square foot. On average in Los Angeles, declined to $723 per square foot. That would indicate perhaps that the average, or it would say the average has come down. But the average is a little misleading because let's take a look at when they break it down by the market segments. Now they have 4 market segments. They have a 3-bedroom, 1-bath house, a 3-bedroom, 2-bath house, a 3-bedroom, 3-bath house, and then a 5-bedroom, 5-bath house. And what's fascinating here is each of these segments, the average per square foot is higher than it was, in this case, 2 years ago or even a year ago. So what this is saying to you is that an average 5-bedroom house with 5 bathrooms went from $1,003 a square foot to $1,133 per square foot, an increase of about 10%. But even the lowest price houses went from $420 a square foot 2 years ago to $540 a square foot now. And the same with the moderate level as well. So what is obviously true there when you break down the statistics is we have less of the high value houses selling and more of the medium and lower houses selling. Well, that makes sense. What happened 2 years ago and a year ago that caused people to want bigger houses? Did people all of a sudden have more money? Well, maybe some did, some didn't. Did people all of a sudden have more children? No, not really. What happened was there was a move for many people, I'm included, of people who used to work in an office to have a bigger house to have the office in their home for safety reasons, security reasons, health reasons, convenience reasons, and a lot of us have liked it. As a result, More people work out of their home than ever before, and less people are working in offices. That trend has stopped in that it's not continuing to increase. People like me who are in a house already have made those necessary changes. Other people are not making that transition because the people so inclined already have. Many of them moved to different markets. Many of them have bought a bigger house, but that's not continuing to increase. We've now hit the new level. And that explains why every market value, dollar per square footage, has gone up, yet the average has gone down nominally. And so I would say that statistic is a little bit overstated because it makes it look like prices of houses are dropping down, where in reality, the prices are now adjusting to a post-pandemic world, and people aren't adding in office space to their house at the same percentages that they were before. So let's go a little further and say, well, how important is the overall change in the market? Here's a great graphic that Fortune Magazine's Lance Lambert put together from the Case-Schiller data. It says of homeowners' gains of 41.3% during the pandemic period, they've given back with these price reductions 3.3%. And so if you want to say, wow, the housing market's gone down, it has gone down, or you could say, I think more accurately, there's a minor correction to the historic increase in values that does not seem to be continuing or systematic or long-term. But take a look at those numbers, and here's the key thing. As long as the average homeowner still is at 38% over the last 2 years, there's so much equity that they're not going to be forced to sell. They could refinance, they get hard money loans, they can rent their properties out. In fact, that's what many people are doing. So the statistics, I think, do not support the housing crash. Now, what happens, if you follow me, you know that I find the real estate industry news to be worse than the political news because it just seems that they have to write about something. It's more exciting to write about something negative than positive. And here's this week's winner. This is from John Burns Real Estate Consulting. Now, this is parroted throughout the real estate industry news. The national cost of owning versus renting has gone up dramatically. Ooh, it looks so scary. The chart's almost at the top. Well, that's because when you make the chart, if you put the top as the same number, it's always going to be the top. And if you make the bottom number, the bottom of it, it's going to always kind of exaggerate the impact of the difference. But that's not even the major issue here. I count three major flaws in these statistics because what they're saying is the monthly payment to own a house, the same house, is about $1,000 higher than it would be to rent it. Well, of course. I mean, of course that's the case, because what are you leaving out? Three very important, the pivotal reasons why people buy a house. Number one, you're leaving out the principal, meaning when you own a house, some of your monthly payment goes to lower the loan amount. Well, that's basically putting money in your own bank account. And you can see this study at the bottom, if you look at their statistics, does say they included the principal portion, which is just stupid. Number two is the tax benefits. Most homeowners can write off interest and or property taxes. When you're a renter, you can't write off your property tax or the portion of it. That's the owner's prerogative. But when you own the property and you pay the property taxes, that may allow you to deduct portions of that as well as the interest. That's not included. So when you have the payment difference, you need to make an adjustment for the value of the property deductions, property taxes, and interest. Number three, the most important factor. While your monthly payment is higher, of course. Why? Because when the house goes up in value, the owner gets it, not the tenant. That's why people buy properties. They buy property because they plan to live there 10, 20, 30 years. They move in today at $500,000. They expect to be worth $1 million in 10, 20 years. And all of that is tax deferred until they sell it. And in many cases, there's no taxes if they roll it to another property or use one-time exemptions. How many ways can you make that kind of profit? There's none. And so this chart really to me is just garbage. It shows the monthly cash flow difference, true, but does not show the way more important factors affecting the benefit of home ownership, which is accumulating wealth. So what should you do? Well, always watch the data and make the best decision for you. If you're looking to sell a house, whether it be to upgrade, downsize, move cross country. It's still a good market. We're getting offers on properties all the time. If you're looking to buy a house, there's a little less competition, a little less urgency. You can negotiate a little bit better. Good time to buy a house if it's good for you to buy a house. And of course, if you're an investor and has good cash flow, great opportunities for returns on your investment. So how can I help you? If I can, call me, text me, email. My information is below. I'm on social media at Bill Gross EXP. Love to help you. As always, make today and this year your best day and best year ever. Thank you.